Hi, this is Joe Stradcutter, High Point Realty. I specialize in short sales, and the goal of these videos is to get some good information and knowledge out to a lot of people right now who are hurting financially, and maybe a short sale is a good option for you. But again, it's really about information and knowledge for you rather than us trying to sell your house. We have talked about the foreclosure process in Minnesota. We have talked about what a short sale is. And one of the questions I keep running into is, can the lender pursue me? Well, again, it's going to go back to that pre-approval letter that you're getting with the short sale. And it's going to, in the pre-approval letter, it is going to say in there what the lender will or will not do. However, if you have any questions, please contact an attorney to review it. It may cost you $100 or $200, but it's well worth the peace of mind. In Minnesota, we talked about the foreclosure process. Now, with a foreclosure by advertisement, if the house goes all the way through foreclosure and the lender takes it back, at that point, the foreclosing lender loses its ability to pursue you for a deficiency judgment or promissory note. In other words, they can't come after you. However, if you have a second loan against the property, that lender, because they didn't foreclose on you, they can still pursue you. And that can be in the form, usually, of a deficiency judgment, where 5 years from now, you got your life back, you're working, and all of a sudden you get a summons, some type of formal document saying you still owe us money. So this is very important when you're doing a short sale. If you're going to be doing, or if you've got a second lien, please make sure you understand what that second pre-approval letter says also. The other thing that we're starting to hear about is that when people start working again, some of the lenders, if they haven't fully forgiven the mortgage, they are coming after wages. They're going to garnish your wages. So just be prepared. Usually this is not happening, but lenders are changing or rules are changing all the time. So make sure that you're working with a real estate agent who understands the process and can direct you in the right direction. And again, don't hesitate to hire an attorney. Another big question is, what's going to happen to my credit? Well, if you miss payments, it's probably going to, well, it will affect your credit. Usually after about 90 days, the lenders start contacting the three major credit bureaus, and you're going to start seeing dings on your credit. And usually what happens, people tell me, is they say, well, gee, I had a credit card with $10,000 on it. I only had $2,000, and now the lender has cut me down to or the credit card company has cut me down to $2,500, and they've jacked my interest rate up to 16 to 20%. So again, if you're going to start missing payments, understand that that is something that can happen. Lenders, or previously, and I'm saying like 2 or 3 years ago, lenders would sometimes say, well, you've got to miss 2 or 3 payments before we'll allow you to short sell your house. Well, they were almost forcing you into a terrible financial situation at that point. Well, most lenders, and I'll say that most, do not, if you can pay, but you're running low on funds or you're getting transferred, something like that, they're going to allow you to do a short sale even though you are making payments. So that's something that has changed over time. When we talk about credit, though, it's important to understand that if you start making or you start missing payments, your credit score is going to be affected. However, it is not going to be affected as bad as if you just allow the house to go into foreclosure. Here are some of the things about a foreclosure. Number one, it stays for 10 years on your credit record, whereas a short sale, it's only going to be 2 years or less. And there are ways to get your credit back. With a foreclosure, it stays on your public record forever. In talking with some of my clients who have been transferred or they're looking, they've been laid off and looking for a new job, some employers are checking credit history. So again, be aware if you're going to just allow the house to go into foreclosure that some employers, or quite a few employers, are now starting to look at that. With a short sale on your credit record, once the house gets sold, you're going to have something like this. Mortgage paid, not in full. And it does not show up as a foreclosure on your record. And more importantly, you decide you want to buy another home with a short sale, you can get another loan within 2 years. With foreclosure, it's 5 or more years before you can get a government-backed loan. So today we have talked about credits, credit scores, and making payments or not making payments, all part of our short sale series. This is Joe Stradcutter with High Point Realty. Wishing you the best. Please contact us if you have any questions. Again, we have a packet of information that we send out to you. No cost, no obligation, and we look forward to helping. Take care. Talk to you again.